results.
Good morning. Good morning. Thank you for having me. I think it's the most important part. The good part about the result is that the premium incomes have grown across all the products. They have grown across the new policies. They have grown across the renewals and across the one-time single premium policies. So one takeaway is that growth has really bounced back for the for LIC, and it will be the same for the whole sector because LIC represents around 60% of the sector. So that's the good part. The not so good part about the results, I would say, is that the single premium policies, these are typically the low margin policies. We've been discussing it for a while that LIC needs to stop some of the low margin products and start growing in the high margin products. So these low margin products of single premium policies, I think they have continued or rather come back with a vengeance in this quarter. That is one part which I would say that, okay, it's a continuation of what LIC has always been doing over the last 10, 20 years. So not much change there. And the second part is that persistency has dropped a little bit from 72% to 69%, which just means that, some of the customers have not been able to continue to pay their premium. Maybe this is expected because, in COVID, except for the top 1 or 2% of India, a lot of people have had hits on their incomes. So this is okay. It's a negative, but I would say it's not, we should give it more time. So that was the not so good part about the results. And thirdly, I would say that, we are still awaiting a lot of data. It's the first result that has come. So we really don't have data like, the new business margins or, the annualized premium equivalent. So maybe, LIC will start sharing that data with the analyst and investor community in times to come. And, once they have a con call or they come and talk about their business strategies of the future, we will be able to give a better idea on, what is the way in which LIC is going to move in the next few years.
Right. Pichuvai, when you look at it, the LIC share price is currently trading at a discount of 11 to 12% of that IPO price of 949 rupees a share. Renewals are also down from 72% to 69%, the way Digant was talking. But Digant, so you're saying we don't have enough data, we just have the headline numbers. We'll wait to see if the management does reach out. But till then, what will this mean for the rest of the insurance sector? Because this is the big one. This is the lion. This is the, when it comes to the insurance pack at large.
The other thing is that LIC operates in slightly different segments than the other companies. Okay, so the other private insurance companies, they are mostly very aggressive or very large in the non-participating products like ULIP or credit protection or personal protection, and these are the high margin products. So from today's result, it does not seem that LIC is getting aggressive in those areas. So I don't think there is immediate worry for the private sector. Based on whatever reading we can get from LIC's initial results, I think LIC is right now just trying to activate growth. Maybe the change from low margin products to high margin products for LIC will happen over time because maybe they are just focusing on growth right now because the COVID years haven't been really kind for all insurance companies, including LIC. So maybe this year the focus was growth for LIC. If LIC decides to pursue these non-participating products in a big way, then we can say that competitive intensity will increase and private insurers will actually have slightly tough times. But as of today, there are no signs of that.
Digant, so having assessed the overall quarterly numbers, the fact that the management as well has alluded to the fact that, their market share of individual policies is at 74%. They have seen significant growth, which, as you said, seems to be the core focal point. What's the view on how the stock has, panned out prior to the listing? And do you believe that there is going to be some sort of an incremental up move and perhaps this is going to be the start of it, the fact that they came out with their FY22 numbers?
Stock price, it's difficult to say because, once an IPO list below the stock price, it itself creates a lot of negative emotions. And, now we'll have the 1 month, the anchor lock-ins which will get over. So I think we really have to see over time. But I think as a stock, the company has done well. They have delivered well on growth. Profit numbers is something which which is very, which can be very misleading. The profit numbers can move here or there based on the quarterly assumptions and whatever happens in that quarter in terms of claims. But in long term, the premium growth and growth in high margins is the thing that we would track. So I think LIC is doing okay in the growth part. The high margin part, LIC has to still do a lot of work. So stock price, I don't expect any magic now, but the long term investors should stick to it because the company is the share price was not fully overvalued. Maybe just an example, SBI also fell 10-15% in the last 1 month because of the market. So I think the 10% cut on the stock price is something which we cannot really fret about a lot. But yeah, the stock remains a decent long-term bet for people who really are the newcomers in the market.
All right. Thanks very much, Digant, for putting all of those details into perspective. Getting a move on then, Credit Suisse's Neelkant Mishra is overweight on staples and pharma. And in his recent report says that staples are doing better since the month of March, though IT valuations are not cheap enough versus the market. What are some of the other highlights for this report? Let's take it across to Pankaj, who joins in with those details. Pankaj?
Well, it's an interesting report coming in from Neelkant Mishra of Credit Suisse. He's talking about his India strategy, and he's advised his investors that if you want to play the upside in the market, you should have defensive positions as sell-off will pause in the global market. Basically, as and when the sell-off will pause, it'll be defensives that may do well this time. IT and metals are now lagging quite meaningfully as far as YTD performance is concerned, and he still says that IT is nowhere cheap despite